Hi, this is Charting Man Dan of TheChartGuys.com, home of technical analysis education. Click the link for a free week trial, no credit card required, and gain access to our multiple live broadcasts daily, community chat room, educational videos, nightly watch lists, and more. Invest in your education and future and join the community today.
Hello everyone, looking at the natural gas daily and weekly time frame. So some upper wick the past 2 days showing profit taking, the bulls attempting a rally here. We need to be cautious that this is not a bear flag, which would be a parallel support and resistance line after a big drop that would indicate further downside is coming, and the hourly chart is going to give us an indication if that is the case or not. So the weekly time frame is currently attempting a bullish reversal candlestick. We obviously have 4 trading days left to go, so that will change. The 100-week moving average resistance is up at 269. That's going to be a very clear key resistance to be keeping an eye on. We're on the verge of a bullish or a bearish MACD cross. The fact that we set that lower high and then a lower low has us looking for a potential pullback here on the midterm. So the daily chart, bulls need to get above 265. That's a key level. Let's look at these shorter term time frames. So the hourly bounce, we could see the clear trend change when we had these lower highs and lower lows day after day. And then right here on Friday, we had the big bull move and the break of the previous high. So that's when the bulls started paying attention, and now they have a higher low formed with a base in the 260s, the low 260s. Make that the low 256s. So that's the higher low. And then we did get a higher high breaking the high of Friday, but profit taking followed that. So why 265 is important to me is because let's look at the 4-hour chart to get it more condensed. Very clear resistance level, very clear previous support level at 265, 265. I'm at the wrong spot. Here we go. 265 and 265. And then we rejected from it as resistance on a bounce attempt. And now we're seeing profit taking just below that level. The high today, 2636. So if the bulls can get above 265, that will decrease the odds significantly that this is a bear flag. A bear flag would lead to further downside, a break of the low established, and a move down into the 240s. I'm watching the hourly uptrend line. We did test that, and we held it today. Bulls rallied right before this candlestick closed. I didn't change this line. It was here before this test. So a bullish reaction to that line, and we're going to be watching that into tomorrow as well. A break of that level will be a red flag of the potential for a bear flag on the daily time frame. So this is a key level to be watching into tomorrow, and 2636 and 265 are very important resistances. So we'll see if the bulls can continue to head higher. We can see the 4-hour chart does have some nice lower wicks showing the bulls buying the dip on each candlestick. Now we just need to see a break of 265. Otherwise, the bears are going to maintain control and jump back on natural gas, driving it to the downside. So we'll continue to check in. That hourly uptrend line is our guide. I appreciate you watching. Have a great night.